What's up, everybody? Welcome to CFP Talks. And this week we are talking about one of the topics that is so painful for CFP students, which is knowing your tax schedules. We break down things to know on Schedule A, on Schedule 1, on Schedule C, on Schedule D, and how these tax forms tend to nest together. And we also give you a really important pieces of insight of why this is relevant for your practice, why it's relevant for you as a financial planner, even if your emphasis and focuses is not on the tax side. As always, we have a couple of really important things for you right underneath this video. One, if you want to chat with Raman and I, and you want to be potentially part of the classes that we reference in these videos, click on the free assessment right there below this video. You and I will spend 30, 40 minutes together. We'll get to know you and we'll see if you're a great fit. The second thing here we have for you is we are offering a 7-day money back guarantee on our question bank. This is one of the key tools that we use inside of our course. And as always, please make sure to like and subscribe to this channel. And let's make that next attempt on your CFP your last. All right, what's up, Raman?
Nothing much, man. It's a Friday. I'm taking Luke to swim lessons. Yeah,
At 7 months.
at 7. Apparently, you could start like really earlier than that. And the thing is, this Romanian and this Indian, we're not really the best when it comes to swimming. Let's just say that. We want him to do a better job than we can.
I think that's one of the best things that you can give your kids. I'm like, me and Diane were talking about it, and I was saying, like, swim and gymnastics, I feel like you'll have a good athletic background no matter what you choose to do from there. But if you can swim and you can do basic gymnastics, I mean, you don't have to be like pole vaulting or doing anything of that nature. But if you if you can like get yourself up and over rings and do pull ups and like, if you can do a flip, damn, that's cool as hell.
Yeah. No, I think that's one of the things that when I was a kid growing up in India, I would climb up like the monkey bars and all that stuff. Like, I'm not saying I was a pro athlete or anything, but it gave me the flexibility on how to be strong and have that momentum, which led me into playing sports. And I feel like that helps, man. Like it's a big part of your life eventually and how you grow as a person.
I think that sports are the single greatest teacher of discipline for a kid
Yeah,
and for
100%.
adults,
Yeah, 100%.
right? Like I
You
think
meet an
that's
athlete,
the
they're just built differently.
well, I feel like you learn how to like work in a team, you learn how to argue with your teammates. You're always gonna have two people that are passionate. Like some of the biggest arguments that I got into as a kid was over football. Like you're not doing your job. Like this team is depending on you. Do your job, and people argue and you learn how to argue and be mad at your teammates and then make up and you know it's not like as an adult you get into an argument with somebody, you probably never have to see that person again. You can make it so you never have to see them again.
Right.
When you're on the same football team and you spend that much time together, you ain't got no choice but to kiss and make up.
Yeah. Yeah.
And I think it's especially for our job as advisors, a lot more people are working in teams than solo practitioners. It's really hard to be a solo practitioner if you want to grow your business,
Yeah.
and being in a team is just great. Like the dynamic is great. With advisor teams, somebody's naturally better at one thing. Oh, we're going to talk to Joe about taxes, but we're going to go to Ram and we're going to talk about investments. And this person is, way better at estate planning. And, you know, when I worked at a team, I think growing my own business before building my team, it's the thing that I miss the most working by myself is having people to bounce ideas off of and talk to. And they have an idea, and I'm like, man, I never thought about it from that way. And it's an incredible thing to have as a kid and to learn that skill because if you learn it and you kind of know it when somebody's never worked on a team and they come in and work on a team, their skin is crawling. They've never
Yeah.
been called out as much, and you have to learn how to put your ego at the door
It
Greatest thing you do
kind of
for a
sounds like
kid.
how we run our class too, you know, like
That's right.
putting
Yeah.
people in a team and then getting them to uncomfortable so they could get more comfortable and help them learn. Like that's like I feel like that's how the education system is designed around things, right? Like the team approach, being in a collective environment, be collaborative environment. It just helps you learn better, I feel like, and just be better at what you do.
Well, there's a lot of research to back this. And there's a lot of school districts who'll go in. Learning is meant to be done in a group environment. The, we've kind of messed this thing up where we look at things like one-on-one tutoring as the absolute pinnacle of learning. One-on-one tutoring is great, but it has its place,
Yeah,
and group learning is more people will get more out of group than for an extended period of time than a one-on-one for an extended period of time because it's like working out alone. You have no sense of what anybody else is doing. You can get lazy. You can talk yourself into, I had a rough day, so I don't really want to do this. I don't really want to push myself as hard as I should. We're social creatures. We're
yeah,
meant to do things in groups. And that doesn't mean you have to do it in a group of 100, and it was kind of obviously why we do things in our small groups because of what it does for your brain and
yeah.
keeps you sane half the time because doing something alone feels very painful. Watching other people suffer with you, there's camaraderie.
Yeah, no kidding. No kidding.
I never want to suffer
Speaking of
alone.
that, what are we talking about today?
Speaking of suffering,
Speaking of suffering,
we're talking about the two most sure things in life, right? The second of them.
the second of them. We're not talking about death
We're
today.
not talking about death. We're talking about
We're talking
taxes.
about taxes.
So let me ask you this, because this is kind of something that I have been thinking a lot about. What do you think CFP's viewpoint on taxes for the financial planner is? What do you think they want out of us as advisors as it pertains to tax and as it pertains to the exam?
Yeah, that's a great question. I literally had a client meeting yesterday, and I was talking to about his tax situation. He goes, Raman, you've already demonstrated good competence about taxes, so I appreciate that. And it just kind of like immediately hit me when he said that to me. I'm like, damn, like I've spent about years in taxes, Joe. Like prior to even being a CFP, instructor with you, I was doing tax planning and even tax preparation for a lot of clients about
Mm,
5, 6 years ago, right? The point is what the CFP board wants you to know tax planning from an angle is if a client comes up and they're talking about their investments and now we're talking about Roth conversions or HSA contributions or mega backdoor Roths and tax loss harvesting, we say all these fancy things to clients, but are we competent to understand how it impacts their taxes?
mm,
And I think and the thing is from the CFP board's perspective, they want you to obviously know how taxes impact a financial plan, right? Your left hand should always communicate with your right hand.
mm,
Uh, but most importantly, being a good practitioner, you should know your tax planning as well. Because what if the client's CPA is fucking up? I mean,
mm.
I literally call out CPAs all the time because they're doing a bad job or they get comfortable. They get lazy with their work because they've had this client relationship for 15 years. So why
Or
would you
they're
best
just
plan?
doing a return,
Yeah,
right? They're just I'm give me the information and I do the return. I don't really think twice about it because I'm a tax preparer. I'm not a tax planner per se.
right.
And some people just want to be that, and that's cool. But if you're leaving money on the table, I feel like you're committing a sin there.
Yeah, yeah. And then, tax planning, it allows us to complement the financial planning work what we're doing, but most importantly, helping the clients bring awareness on their taxes, especially if they're oblivious to it. If their CPA is not doing the job that they should be doing, it's our job to at least be able to review what the CPA is doing so we could at least guide our clients saying like, hey, here's what I'm noticing. You should talk to your CPA about this. I'm not saying start becoming their CPA. That's not what I'm saying. But you need to be competent enough to understand, like, okay, what is on this schedule and is this the correct thing on this schedule?
Mm. You know, it's one of my personal pet peeve that accountants say, you've made too much money, so it knocked you into a new bracket. And I'm like, that's not a thing. That's not a thing. There's no such thing. And so, clients will come back and say, oh no, I don't want to do this extra work because I don't want to knock myself into a new bracket and pay taxes. And I'm going, huh. And I think, this was something that I noticed, and I can tell you the exact moment I remember where I was. The clients were two friends of mine. They were a young couple. And the thing that I was helping them do was like pay off debt. They had a bunch of student loans. And all I did with them was we would sit down once a quarter. We would update their financial plan. We'd go through what they did in the previous quarter, how much money and they said, oh, we talked to our accountant and he said not to work overtime because it's going to push me into the next tax bracket. So we'll end up paying more in taxes and then we don't have the money. And I'm like, what planet am I on? And I remember explaining to them how a marginal system works,
Yeah.
and they were like, "What?" Like, so we're leaving money on the table, and I remember thinking, "Okay, this is probably the area where people have the most misconceptions." Right? I have friends who go, "Yeah, you can write it off through the business." And I'm like, "Yeah, but I still have to pay it. Like it's not money that's just like everybody uses the word write off
Yeah. Oh,
like
it's a
it's like
write-off.
I'm like, when you say write off, it doesn't mean free. Like it's
Yeah.
not like, oh, you bought the car or you're leasing your car through your business or you pay your cell phone through your business. Oh, it's free. No, it's a write off means that I still have to pay that money. And so when you walk around with the average client and two CFPs point, and I tend to agree with them on this, tax loss harvesting is not tax planning. It is a part of tax planning, but if the extent of tax planning is tax loss harvesting, we're under massive misconceptions.
100%.
And clients are walking around under misconceptions. And most advisors are walking around under misconceptions because half of what you do is you have to be careful about what investments you're buying, how they're taxed, AMT for your clients who get there and you don't even know,
Mhm.
understanding the tax implications of their compensation outside of cash, like ISOs and NQSOs, and how that potentially affects it. Because I had a friend of mine who was getting tons of stock options and goes, I'm going to, I go, whoa, 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 you're going to make yourself subject to AMT. And he goes, what? What's that? I go, sit down, son. Let me learn you. And I explained to him what AMT was. And I said, be careful here because he had ISOs not knowing that he was going to owe the IRS a $15,000 check because he had to hang on to his ISOs. In his mind, it was a stock option, not knowing that there was going to be an AMT tax payable.
Right.
So when you're going through this, there's a lot of things that are more tax sensitive. Tax planning is not just fund your IRA. Fund,
Right.
that's a part of it, and it's the most basic level. And as advisors, honestly, it's the most basic thing that we can do is teaching people how to fund tax deferred accounts or and make sure that they're taking advantage of some of those things.
Right.
There is so much more to tax planning. How we allocate assets, where do we put certain investments? What type of investments do we buy? What type of investments do we avoid?
And even on the CFP exam, I'm glad you
Right,
brought that up. It's like, okay, like you have a taxable brokerage account and a what type of investment would you recommend? That's the most tax efficient in a given client situation.
correct.
Is it a municipal bond fund? Or is it individual municipal bonds? Is it a growth mutual fund or is it an index fund or is it an ETF? Right?
Right.
Like, and those things are tested. That is a testable thing on the exam.
So my senior partner, when I was in FA, my senior partner would always say, if we're putting mutual funds inside of taxable accounts and we get a sideways or down market, it's a disaster. It's very difficult to explain to clients, hey, your portfolio is down 10% last year, but you owe $5,000 in taxes.
Mm.
It's a nightmare. And so if we don't understand those implications as advisors, this goes far beyond I'm going to net your losses with gains and so you don't have to pay a lot in taxes. That's the easy thing that we do.
Yeah.
I
You know,
think understanding those things is far important. Sorry for cutting you off.
no, that's okay, 100%. And I feel like that's where our knowledge as CFPs, we have to be competent at knowing our schedules, right? Because
Agreed.
when a client comes up to us and then we see their schedules and we take a look at like, their schedule Ds and we're kind of like, wait a second, like, hey, what's going on over here? Like, I'm noticing this discrepancy. What did you do with your funds? And I'm like, I don't know. I just own a mutual fund. It's just kind of like, okay, hold up, wait a second. And the craziest thing is whenever I work with clients and I look at their 1040s, I always look for ordinary dividends in their
Hmm.
1040s. And if I start seeing some aggressive amount of ordinary dividends, that's a conversation I have with them. Like, do you know what this means? And they're like, I have no clue.
Yeah.
Okay, like let me explain to you why this is happening to you right now.
Yeah. And I want you to think about this as an advisor. So if you're one of those people that's sitting going, CFP holds no value. And I'm seeing a lot of this on LinkedIn where people say, I'm ready to give up my cert. Cool, good for you. The reality of it is that most advisors walking into the CFP material have a very premature understanding of tax. And when you flip through a tax return and you actually understand what you're looking at and you are able to explain that in easy language to your client, you are an absolute rock star and CFP has just paid for itself 10 times over.
Yeah, 100%.
So, for those of you who are sitting there going, why do I need to know this? Why is this relevant? Because you're a financial advisor. And if you don't understand the tax implications and you're just the investment guy or you're just the insurance person or you're just this person, and you are leaving a lot of value and a lot of trust for your clients. On top of it's an additional service that you can charge money for. It's a win-win for everybody.
And
We're
see, the
not saying
CPAs are
you're
doing it. The
right.
CPAs are doing the tax planning and the tax preparation and now financial planning. A lot
Right.
of CPAs are trying to get their Series 7 licenses and even their CFPs now.
Yeah. And they will steal the business right out from underneath you because they're talking to your clients about things that you don't understand.
Yeah.
Right? If you're just the mutual fund guy, or you're just the guy who does the life insurance, and you're not having conversations about tax. And again, you don't have to be a tax preparer, but you do have to understand what you're looking at when a client brings in their tax return.
Yeah. Yeah.
So where do you start here when you start thinking about tax forms? And let's make it obviously specific to the CFP. What tax forms are you particularly looking at here?
Yeah, I mean, when it comes to looking at my client situation, obviously they're 1040, right? That's just the basic. You have to look at their 1040. You have to understand their 1040. And the CFP board wants you to understand how a 1040 works,
Right.
right? That's the bare bones minimum. Now, the second one the CFP board wants you to look at is, I'd say it's Schedule A. Like Schedule A, which is what, itemized deductions.
Okay.
Right? You'd want to know like how, because when you see a deduction on 1040, and you take a look at like, okay, why is this deduction number odd? It's like $24,630. Like, wait a
Mhm.
second, that's not a standard deduction. Now you know that, okay, this is where Schedule A came in.
Right. So where do you think some of the value adds for us are as advisors, and then why, and then what should I be cognizant of for the exam?
Yeah, the value for us is basically as advisors, as practitioners, is identifying, especially if a client comes up and says, "Oh yeah, like here's my tax return. We're taking standard deduction," but you find out they're business owners or they have like additional ways to get itemized deductions. They have a heavy mortgage, and once again, this is where we need to know what our Schedule A itemized deductions are solved, right? Our medical expenses. Oh, I had a huge medical expense this year. We had to get a surgery done, things like that. And you look at the client's tax return, like, wait a second, I don't know why this person has a standard deduction. Maybe they need to be using an itemized deduction. Hence
Hmm.
why we need to know our Schedule A itemized deductions.
Or vice versa, where somebody is actually itemizing and they're just over that itemized limit, where it might be better for them to move certain deductions to the next calendar year to make the discrepancy bigger.
Right.
That's
Yeah.
something we cover in our fundamentals course where we actually go through a problem where somebody's just over where it might make more sense where by simply shifting an expense obviously it has to be something that's available to you or something that you can do. You end up saving two, three, four, $5,000 in
Yeah.
taxes by simply shifting one thing from one year to the other. It's an absolute home run to be able to save that amount of money in taxes by knowing one simple little detail, right? And again, if your CPA is a volume CPA where they're doing three, four, five, 600 returns, and you're submitting your paperwork to them on April 1st, they're probably just trying to get your tax return in and out the door and done before April 15th. Are
Right.
they paying attention to those little things? No, but we can,
Yeah.
right? Where we can say, hey, why are you itemizing or why are you not itemizing?
Right.
So I think understanding how medical deductions work, and I always break, my Schedule A into the four parts, which I think for the CFP exam, you absolutely have to know your four parts. You have to know your medical and dental, you have to know your interest deductions, you have to know your tax deductions, and then everything else.
Right.
And I think, especially as clients' home situations are changing, where we don't see a lot of people in their early 30s necessarily running to buy a house anymore because of the cost of housing now, versus where people are renting, or when they're trying to make that decision between buying and renting. You're saying, hey, if buying is $8,000 a month and renting is $6,000 a month, well, this might make sense from a tax perspective where we can make up the difference.
Right.
That's a great conversation to be able to have with somebody to say, hey, you're going to get this tax benefit where we can actually bring down that difference a bit. So understanding that deduction of what is eligible on your mortgage and what of your tax bill is eligible for deduction
Yeah.
is going to be big,
Absolutely.
especially relative to their income.
Absolutely. And then now the second schedule I'd say is a pretty big thing to discuss on the CFP exam is if you own a business or if you're self-employed. This is where your Schedule C comes in. Now, the CFP board is really, really, really big into, mentioning things like SEP IRA, solo 401ks, and contribution into these accounts, and then self-employment tax. All that is big, and it all falls under our Schedule C.
I think everybody who's taking the CFP should fill out a Schedule C at least once. Take a pseudo business. You have tools. You can ask ChatGPT to make up a business, plug it into Schedule C, and see if it's correct. However, do not ask ChatGPT to review a tax form. It is wildly inaccurate. They
Yeah.
do not know how to do it. The AI is not even close to that level, but you can ask it to create an example for you. There's a free example for you.
Yeah.
Okay. You're welcome. We just gave you $500 worth of value right there. Three questions.
Yeah.
But what I'm saying is you should fill it out at least once to understand where revenue goes, if somebody's selling a product, where cost of goods go, where their expenses go, how that flows in, and how that's related to QBI income on the front page of the 1040. So then you can learn that additional deduction they get as QBI. And when somebody's eligible, as opposed when they're not eligible for QBI, which is obviously very big. But you should also know where Schedule C flows into obviously Schedule 1 and then to the 1040. So a lot of these schedules are nested together. So I'm really glad that you brought up Schedule C because the next schedule is Schedule 1, which if you have a Schedule C, you're going to need to fill out Schedule 1,
Yep.
which operates in two parts, one for your adjustments and then one for your additional income. So if you are a business owner, if you have rental real estate, if you're getting royalties, all of those types of things you'll tend to see on Schedule 1. In addition, any adjustments. So if you're self-employed, you're going to take your self-employment deduction there,
Mhm.
the 7.65%. If you're putting money into a SEP or a KEO or a Simple or anything of that nature, that's going to go on your Schedule 1. So you can see how this now as a person who's sitting there and going looking at my client's thing, and if they're coming in and telling me they're self-employed, well, I'm looking for that deduction. I'm looking for how much they're putting away in their retirement. I'm using that as the basis for my retirement analysis. And if somebody says, well, where did you get $25,000 as my contribution? Oh, that's what you put into. Oh, yeah, I forgot about that sub contribution. You're right, Joe. Holy crap, great job. Didn't even think about that. Well, what does your business income look like? Because if you can be contributing more, you can. You opted for 25, but can you do 30? Because that would make us closer.
Right.
Look how many conversations I've just opened up by looking at one form.
Yeah. And that's tax planning at the best, right? I mean, that's the CPA is not doing that, who's just filing your taxes.
Correct.
And that's where you as a CFP step in and be able to have that conversation with the clients.
And you should be having that, right? Like, and you should be confirming it with the CPA, but you, we're CFPs. We're on that level. That's what we're here for. So, I look at that in the context of this is stuff that we should be doing. I ask people for their tax returns. I
Right.
want to see what's going on. I don't want to be the person that's just I never want it to be just the investment guy.
Yeah.
Joe takes care of my well, you know what? I'm going to pick up the phone and call your accountant to make sure that we're not doing anything incorrect, how we should be allocating, and especially when you introduce things like trusts, it starts to
Yeah.
get complicated.
Absolutely.
What's the last schedule that you think is
I,
relevant for the exam? So we
I'd
did,
say something very simple. Um, Schedule D. It's a
yeah,
simple schedule, but understanding how it works, and once again, the CFP exam is going to test you on your capital gains and capital losses, especially giving you a situation where you have long-term capital gains, long-term capital losses, and short-term capital losses, and short-term capital gains, and then what gets carried forward. And I feel like the Schedule D truly allows us to understand how it operates.
I agree with that. I think knowing Schedule E is a very important schedule. I think knowing that gives you a sense of what your clients have been doing in the past, how much is being bought and sold,
Mhm.
what they're generating on a regular basis, and how much they're paying in taxes on that. Because again, if that offers an opportunity where we're saying, hey, why don't we shove these mutual funds into your tax deferred account so we don't have to deal with these capital gains every year and
Yeah,
we can avoid them and we don't even have to offset them. Let's put all the 15% and muni bonds in the taxable accounts. Let's build it in that way so it is far more tax efficient because again, if you're saving your clients $5,000 and your fee is $5,000, they want to kiss you. They want to have your baby if you're saving
yeah.
any money that they don't have to give to the IRS is you are building a tremendous amounts of trust with it.
Absolutely, absolutely. And I feel like also Schedule D allows us to find mistakes, especially if their CPA forgot to carry forward any of the losses from previous years. And I mean, I've seen that happen where, there's this carry forward losses that the client was supposed to bring in and they're not listed. And understanding all these tax forms not only makes us a rock star of a financial planner for our clients, but it also brings that competence. Right? We don't have to be the tax preparer for them. We don't have to file their taxes for them. We just have to be able to understand what we're seeing, what we're reading, and be able to clearly deliver the message to the client. Be like, hey, here's
100%.
what I'm seeing in your tax returns.
Absolutely. So I think these four schedules, Schedule A, Schedule 1, Schedule C, Schedule D, as you're preparing for the exam, fill them all out once. Look, get an example, look at a client situation. You probably have some case studies in your materials. If you don't, we got you covered. We have this as part of our question bank. It is part of all of our tax quiz. We include multiple schedules in there that we are ask you to read and we ask you to interpret and we ask you to put it into a tax form. So, with that being said, I think that's a great place to stop.
Yeah.
We hope you enjoyed this episode. Any questions, comments, or concerns, feel free to reach out to Raman or myself. And we will see you guys next week where we're going to be chatting with a few more people from our 6 for 6 class in July. And they're going to bring some amazing insights into how they prepared, their best practices, things that they learned along the way, how they got over the struggle and the motivational voids throughout the process. And they're going to share all of that with you guys next week. And we look forward to sharing that with you then. All right, everybody, have a great week.